Hey guys, it's Tyler here standing in for AK, and I wanted to cover some things on options because we're getting a lot of questions and comments talking about them, and I feel like there's a few key concepts that are important to understand before you dive right into them, because options are a great way to lose a lot of money very, very quickly. So here are a few things I wish I understood before getting in. Now, number one is the zero-sum nature of the game. So they're a little bit different than stocks and bonds. If you think about if you're a long-term holder in stocks and bonds, you're receiving carry, you're receiving dividends from the companies you're in, you're receiving interest payments from the people that you've loaned the money to in the case of a bond. Well, an option is a little bit different. You gotta think about it like taking a bet versus someone else in the market. So when you buy an option, someone else is selling it to you, and then whoever wins is gonna make money and the loser's gonna lose money. So it's more of like, the best way to think about an option is taking a bet against the house at a casino or placing a bet at the horse racetrack, something like that. And that's really how the option market works. Now, knowing that, you have to think, who are the players that I'm playing against? And most of the time, these guys are damn good. They're market makers, they're other professional traders. So when you go in and buy an option in the market, just realize that the other side of the trade is probably very savvy, very good, they're highly skilled, and that makes it very, very tough to make money. Now, that doesn't mean that you can never make money, because sometimes large mispricings do occur for a bunch of different reasons, but in general, the people you're playing against are really good, and they likely do it for a living, or they have some huge firm with a bunch of guys making sure that what they're doing is gonna make them money, which means if the other side's making money, then that means you're gonna be losing money. So just keep that in mind before getting in. Now, the second thing is, when it comes to trading options, there's basically two components that you're betting on when you get into an option. And the first one is volatility. The second one is direction. So direction, everyone already kind of understands this because we can bet on direction with the underlying stock. And the option basically gives us a leveraged way to bet on direction. Now, volatility, though, is something that's unique to options. And in order to speculate on the level of volatility, you have to play in the option market. Now, if you don't even know what volatility is, you don't quite understand, that's another reason to not start trading options, because that's a key component of an options profit and loss. So if you don't understand how volatility works and how it evolves through the market and plays out in the market, then you definitely need to be doing a little more studying. I'm not going to get into the exact definitions of volatility and how to think about it in this video, but I just want to bring to awareness that you really want to understand what volatility is before going and trading options. Now, the other thing to think about in terms of the direction. So I said, options can also be used to bet on direction, and they give you leverage on that direction. And we all know that, right? Like, that's what really entices people to get into options in the first place. You can buy an option for $1, watch it go to $5, and you're happy, right? And that's much easier to do in an option than to, say, put some money in Apple and watch it 5x. For a stock to 5x, it usually takes years and years. An option can do that in a month. That's why everyone gets driven into the option market. But really ask yourself, why do you need the leverage? Why is it because you want to try to grow your account faster? Really ask yourself, why is it necessary? Because leverage can also work the other way and absolutely decimate your account. So it's unlikely that you put a bunch of money into Apple stock and next year it's at zero, but it's very likely that that can happen in an option. So really gotta get down to the core of those questions. Do I understand volatility before placing a trade? Do I actually need leverage? Or is it just, I wanna speculate and gamble? And if you're thinking about these concepts, I feel like you'll be much better off before jumping into the option market, because I see so many people that get in there and like to mess around, and they end up just throwing a ton of money away because they don't realize the nature of the game. And it's not just some panacea that will help you win in the market. So another thing to think about is, if you don't have an edge in the underlying, because remember, options are always based on an underlying thing, a stock, a bond, etc., mostly stocks. And if you don't have an edge on that stock, so for example, you can't accurately predict where that stock's going to go up or down, then it's going to be even harder to win in the option, because the option's price is dependent on where that stock goes. So usually what I like to tell people is just focus on underlines first. Focus on vanilla stocks. They're simpler to understand, and in order to win in the option market, you're usually going to need to have an edge in the underlying anyway. So definitely start there. And finally, the last thing I wanted to bring up about options is their high cost structure. So options have a pretty large bid ask, and that what the bid ask is the difference between what a buyer is willing to pay and what a seller is willing to sell at. And this is how market makers make their money. They buy at, say, $1 and they're willing to sell at $1.20, and that spread in between is what they make day in and day out hundreds of times. And that spread, it seems small at first, but actually adds up over 10 trades, 20 trades, 100 trades, 1,000 trades. It starts to add up and erode into your profitability long term. So that's definitely something to be aware of. And also the cost to trade options is pretty expensive. And even though it might look cheap on the platform, like, oh, it's just $1 to trade an option, those definitely add up over the long haul as well. So just be in mind of all these little traps and things that can cause you to really not make that much money in the option market before you jump in. Now, I think it could be very lucrative for people that understand it and carry out what's a very sound strategy and execute it with discipline, but it's definitely not something that's just gonna make your account blow up and you're gonna go from 1,000 to 1,000,000 overnight. It's definitely not what the option market is. It's tough. It's just like any other game where you're you versus another person, and you have to be better than those other people to win in the long run. It's that simple. So thanks for tuning in, guys. If you have questions on any of these concepts, you can just comment below and I'll respond to those, and I'll see you next time.